the floor of the CME Group. This is Danny Riley with today's Unemployment Friday update. Wow. You know, there's this sense of security that's given to the public as the market rallies. And then this morning, you get a prime example of where you find the distrust in where the markets are. The ADP number came out on Thursday. It came in better than expected, which would lead us all to believe that today's number was going to come in line or even better. And the estimates range from 90,000 to 160,000, upwards. Even I heard 200,000 on CNBC this morning from someone, an FX guy, but the number comes out at 18,000. At 5:30 in the morning, when I got up, the S&P was up 3.5 handles. At 7:25, just 5 minutes before the number came out, the S&P was up 2 handles, and it opened up after the number 15 to 18 handles lower. It's been a complete catastrophe here. Now what we want to do is we want to go back a little bit. We want to talk about the credit default swaps and how things have really not improved in that area. You know, the markets tend to take good news and bad news and digest it. But over the last couple of weeks, what we've seen a big markup going into the end of the month. As we go into the new month, we've got the earnings with Alcoa starting next Monday. And there's this big idea that the markets are in good health. You know what? We're not here to fight the markets. If they're going up or down, we want to be part of that. But the reality of it is that we live in a very uncertain world. Now that said, we came out, MrTopStep came out and said that he was looking for 950 in the S&P. We had a 100-handle sell-off in 9 weeks. And then in the last 10 days, the S&P went from 1257 up to 1345 and a half today in today's Globex session. And we're trading down toward the 1133, 34 level right now. You know what? We're not here to fight City Hall. If the market's going up, we want to go with it. But the basic concept here is that the market has rallied off of some really fundamental short covering, buy programs, money being added at the end of the month. And we're not really sure that it's all that healthy. Until we start to see a little better job creation picture, and we see some of these credit default situations both in Europe and the US improve, we're going to be subject to these type of raids that we're seeing here in the S&P. Now back to the call down to 950. We're not going to run away from that call. We made it, and we do know that the recent rally has been a game changer. Do we think that the markets are in good shape? No, we don't. Do we think that the markets can rally? Obviously they have. But it's this type of picture, this type of unemployment picture that we see in the stock market that has turned the face of the market today. What we want to do is we think that the markets are going to continue to trade lower here into the afternoon. And then we've got Monday with Alcoa reporting. We're not quite sure, but we do think that we're in for a little bit of downside here for the next couple of days. We'll be back with another MrTopStep report.